Hi, this is Drew Tignanelli. This is our February update, and new year, 2015, and nothing's changed.
Yeah.
You know, everything same. Europe's still a mess. The U.S. is wonderful. The dollar's getting stronger, but commodities continue to say, and that's a fascinating question. What are commodities saying? You know, there's oil's down in excess of 50% from its high.
That's a good thing.
Well, it is on one side, and it's negative on another side. But, you know, the question you have to ask yourself is it because demand is lower? Copper is down. Aluminum's actually holding up. Steel's down. You know, so many natural gas is down. So many commodities are down, not just a little bit, but a lot. And so that would say that there's no real demand out there for these things. At least that's one theory. And if there's no demand, that means that the world economy is slowing down, which couldn't be a good thing with all the things they've done to try to prop it up.
Yeah, that's the question, the supply or the demand, right? You know, so we know on the other side of the equation, we've had a lot of oil production, and we've had all the fracking in the U.S. and the energy independence. So the question is there too much supply from us, and then subsequently the other countries, you know, the UAE and Saudi Arabia.
A lot of your oil-based countries are destabilized. You know, like Egypt and Libya and Syria and Iraq and so forth. And so I'm sure they're doing anything they can. Any oil they get, they're pumping out of the ground as quick as they can to try to make money because they don't care. There is no such thing as profit to these countries. Russia also is struggling to keep things up. So I'm sure they're just, if the price of oil goes down to 40, then we just have to pump another 40% more.
Right, because they're trying to get a certain amount of revenue coming into there. They're used to that revenue stream, right?
Yeah. So something's got to break, you know, and so it's probably the corporations like the shale corporations in the United States and the Canadian oil companies and you know, oil companies that are based on profit as opposed to countries that really don't care.
Yeah, and if their production prices were higher, you know, so if the break-evens were higher, you know, if they needed $80 oil to make it work, and now oil's at $45, that's going to be an issue for them. They can't sustain that for an extended period of time. Right.
And you've also got Venezuela as another problem. But that doesn't answer why then copper is down. Why is natural gas so low? Why, you know, there's a lot of metals that are down. Industrial use metals. So, you know, and I think the answer to that is that you had a similar thing where you had a lot of supply created, but you also had China that was out there thinking, you know, hey, these commodities just keep going higher, so let's just hoard what we can, let's buy excess. And now that their economy is slowing, they're saying, hey, these commodity prices are dropping, so let's just use what we've got in inventory and let's not buy anymore. So I think it's a funny balance, but sooner or later it's going to pop the other side. In other words, sooner or later you eliminate investment, you eliminate research and looking for new discoveries and so forth. And next thing you know, you run out of the supply, and you get the other side, the pop.
Yeah, and you know, we talk about China slowing. It's slowing into the sevens, you know, 7%. An envious growth rate for us would be, but yeah, it's slowed down. And as you said, the production was assuming a continued ramp up, and you know, as they slow down, markets adjust if we allow them to adjust naturally. And you know, right now we're benefiting from lower gas prices here in the States. It's a de facto kind of tax cut for folks. But
my wife loves it. She
talks
about it all the time. She tells me, I went to the gas, I got $1.99, only paid $22 to fill my tank. You know, she thought that was just the most wonderful thing.
And what did she do with that excess?
I don't know. She didn't give it to me, that's all I know. Anyway, then you also have the Greek elections. Doesn't sound like a big deal. Somebody said that the economy of Greece is as big as the city of Philadelphia. I mean, think about that. The economy of Greece is equivalent size to the city of Philadelphia. So it's not a big issue, but yet it's a big issue. Because Greece is part of the Eurozone. And they've now elected a new prime minister and a new party that will run the country. They run with a parliamentary process in their government. And this new government is saying, this is ridiculous austerity. We're going to give everyone a job. We're going to give everyone a raise. We're going to say no to austerity. We're going to say no to all this debt repayment you're trying to make us do. And now the question becomes, what happens? Are they successful in their negotiations with Europe? And if they are, what does Italy do? What does Spain do? What does Portugal do? What does Ireland do? What do any of these other countries, Cyprus, who also have similar problems, and ultimately France? France, in my opinion, is the European wild card. They're the most horribly run economic country I've ever experienced in my career.
Right.
I just think their economics of the way they run France is probably the worst. Well, Greece is probably close, but at least Greece doesn't pretend.
Right.
France pretends that they're doing a great job. You know.
Yeah. Well, it's a challenge. Will there be a contagion effect here? And so, as you say, Greece by itself doesn't matter numbers-wise, but it matters culturally wise, and there's an emotional side, psychological side to the equation that's going to have an impact. And we've seen Greece bonds, yields get back close to 10, over 10% at one point here. We've seen the market getting hit a little bit today, a lot of it, 10% in the Greek market. So it's having psychological impacts to the rest of Eurozone.
And we have to be cognizant of Europe because I think it's something like 30% of the world economy, and that would be a significant impact if something happened there to the European economy, even worse than what we've already experienced. We've limited any exposure we have to Europe. We still have some because, it's usually at these darkest moments that things can turn around.
Right.
Even though we still believe there's going to be more pain. You don't want to be out of something totally.
Right.
You never want to think you're that smart to know that you should be out of something 100%.
Yeah, when the darkest is just before the dawn, right?
Yeah. And I think that's what's happening with commodities. We own a reasonable hunk of commodity-based or production hard asset type companies.
Right.
Not too much, but we own enough.
Right.
And because they are the part of the market nobody wants to own right now. That tends to be our style, is look for things that nobody else wants to own.
Yeah.
So we continue to stay conservative, but we continue to stay invested depending on where our clients are. We believe that there is still one big downturn left before this bear market that started in 2000 ends. Everyone feels happy for the last 3 or 4 years, thinking that this is fantastic. I think there's a lot of policy mistakes being made, and ultimately the markets and the economy is going to pay for it.
Yeah, and clients need to be careful about what they see in the media. It's one thing we talked about yesterday. So, we were hearing, new highs, and then yesterday the market's diving, the market's going down. We were all
plunging.
We were plunging. We're 3% off our all-time highs. So be careful what the media says would be a message I'd want to make sure people are aware of.
Always be careful what the media says and everything, I think.
That's right.
Another topic, we're headed into tax season.
Yep.
And a lot of our clients, we do their tax returns for, and our new company, Boner Tax Services, we're obviously doing a lot of taxes for them. But the thing that we've learned is that working with clients, there's a incredible benefit that takes place in the preparation of that tax return when the client's engaged with us. In other words, they're not just leaving it off, and then when we send it back to them, they just send it off. But the client wants to look at the numbers, think about the numbers, talk to us about what's happening with the numbers and so forth. We find that collaboration really builds the best. And that's also true for people who aren't using a tax preparer. And they're going to TurboTax and they're thinking that TurboTax is doing, because TurboTax is this computer program that knows everything and it's omniscient about taxes.
Right.
Well, the problem is that if you don't know what the output should look like, the output that TurboTax might give you back may not be correct, and you can't fix it because you don't know that you didn't check that one little box, or you didn't put that one little thing in the right place, or whatever the case may be. We review all of our personal financial management clients or supervision clients' tax returns at no cost. So any of our clients that are doing their own tax return, going to somebody else to do their tax return, send it over and we'll look it over to make sure that it is done properly, because there are a lot of easy mistakes to make when you're doing it yourself, or you're sending it to somebody else to do, and nothing wrong with that, sending it to somebody else to do, but they may not know some of the things that we know because we handle a lot of the investments, investment management, and so forth.
Right, and you've talked about the investigative reporters that send out the same return information to multiple tax preparers and multiple routes and get different results.
They get 18 different results, and there may be only one that's even close to what they consider to be the perfect tax preparation, and the reason is because it's, you just looking at information, you don't have the experience of the individual. It's hard to make sure that you get all that information into all the proper places, and so what we find is that when you collaborate with that client and there's interaction and discussion about it, you'll find that tax preparation can really, the accuracy of it increases dramatically.
Yeah, and it's not that people make outright mistakes with the numbers. It's just they miss opportunities in many cases.
That's really the main thing that you're looking for, is you're looking for the opportunities. But if the client just gives you information, you just take it and plug it in a return, you may not have had that ability to say, what kind of things happened this year? Did you have this? Did you have that? Did you think about this? You want to do this, et cetera, et cetera. Anyway, it's an important issue at this time of year. So you ought to give us a call if you'd like to set up a meeting to drop your tax information off, or you just get your tax information in as soon as possible so that we can begin the preparation of your return. Again, if your tax information is in by the end of March, we're probably going to get it finished by April 15th. But if not, you're just going to be dependent upon our workload as to whether we're going to have to put you on extension or not. So that's our February Financial Pulse. This is Drew Tignanelli saying God bless.